Hello. Today we're here to talk about another part of healthcare reform, specifically the Small Business Healthcare Tax Credit. Yes, that's right, tax credit. Sounds pretty good, eh? Well, why don't I tell you a little more? Why did this credit come about? Well, small businesses have more than their fair share of business challenges. So Congress thought that they could lend a hand in the healthcare reform bill. This tax credit is designed to encourage small businesses and small tax-exempt organizations to offer their employees health insurance coverage. If you're a small employer and currently provide health insurance for your employees, you may qualify for the tax credit. You might even be able to add specialty benefits and offer a richer health plan to your employees. Generally speaking, the credit is available to employers with less than 25 full-time equivalent employees with average wages of less than $50,000 per year. Like I said, it's a good deal. And to make it easier, United Healthcare developed a modeling tool to help employers determine their eligibility for the credit and to estimate the credit amount. I'm going to walk you through the modeling tool to give you an idea of how it works. What do you say we get started? Remember that what we're talking about is just a start. To be on the safe side, you should talk with your own accountant and attorney. The first step in the modeling tool is to enter the tax year you are working on. Next, you'll enter the number of employees you have. You need to have fewer than 25 to qualify for the credit. But we're not just talking 25 people. The magic number is 25 full-time equivalent employees. To get that number, count your full-time people. Do not count the business owner or his or her family members. Let's use 10 employees as an example. Then figure out the full-time equivalent for part-timers. You don't need to include any seasonal workers who work less than 120 hours in a year. Let's use 3 part-time employees as an example. Next, you'll enter the number of hours on average your part-time employees work per week. We'll divide the annual total hours worked by part-time employees in a year by 2,080. Let's use 24 hours as an example. 10 full-time employees and 3 part-time employees working on average 24 hours per week is 11 full-time equivalent employees, which would meet eligibility rules. Remember, you must have fewer than 25 full-time equivalent employees to qualify. Now on to wages. To qualify for the credit, average annual wages must be less than $50,000 per employee. Using the modeling tool, you'll enter the estimated amount of annual wages that will be paid to full-time equivalent employees. For this example, let's use $300,000. Eligible employers must pay at least 50% of the health insurance premiums for single or employee-only coverage. Finally, you'll enter the estimated total plan premium and the estimated plan premium paid by the employer. Let's use $62,400 and $43,680 for this example. Based on these numbers, the modeling tool calculates the percentage of total plan premiums paid by the employer, which in our example would be 70%. Remember, you must pay at least 50% of the health insurance premiums for single or employee-only coverage to qualify for the tax credit. The employer's deduction for group health premiums is reduced by the tax credit, and the total credit cannot exceed the employer's net premium payments. A small employer paying $50,000 toward employee health insurance premiums could reduce his or her tax bill by almost $23,000 with the credit and deduction. That's nothing to sneeze at. The modeling tool will also help you determine the credit calculation. You'll first select your organization's tax status, and then enter the state in which your business operates. For this example, let's select non-tax exempt status and Illinois as the state of business operation. You'll enter the number of employees who have single or employee-only health coverage. Let's use 10 for the example. And the number of employees who have other coverage levels. Let's keep it simple and use 0 for the example. Remember, this is just an estimate. We used the state-specific average premium amount, which is determined by the government to calculate the credit. Remember that the credit is gradually phased out for employers with 10 to 25 full-time employees with average wages between $25,000 and $50,000. These credit reductions are shown in the final estimated credit calculation. So that's what you need to know about the healthcare tax credit for small business. Fewer than 25 employees, average wages under $50,000, and you cover at least 50% of premiums. It's a good deal. And hopefully this information helps you select the right coverage options for your employees. Now that you know how the modeling tool works, you can try it out yourself and see how the estimated credit amount might change if you change your contribution levels or the number of employees in your organization. If you'd like more info, it's out there. Just contact your broker or United Healthcare representative, call your accountant or attorney, or visit the IRS website. Until next time, here's to good health.